Hello, friends and family. Right now, what you can see on the screen here is the Nasdaq futures. It is August 30th, 4:49 p.m. Pacific time, 7:49 p.m. Eastern time. You can see these wave counts here. Wave 1, 3, 5. That's a type of Elliott wave structure. And what I want to point out here is that wave 4, that's the current wave that we're in right now, actually kind of moved into wave 1 territory. Wave 1 terminated at 12,262, whereas the low here on August 30th is 12,247.5. So it did enter into wave 1 level territory, but it did not close under that. So we're in a gray area of whether or not this is going to continue to move lower to the 78.6, which is 12,006. Or is the market going to continue moving lower past the 78.6 down to the 61.8, which would be bringing us down to about 11,800. What is important to note here is that there is a huge gap in the futures at 13,224. Last year, Jay Powell created a gap that lasted about a year long. I don't know if this is going to be a gap that stays open for another year, but that would be pretty brutal, because if it is, then this market is going to make new lows. Okay, and there's actually because the trend is still showing the path of least resistance to the downside, there might be more selling pressure that comes. But tomorrow morning, before the bell opens, there's actually a Fed speaker. I don't know who it is. Loretta, right? And we don't know, how they're gonna, what they're saying, what will they say, and how that is going to affect the markets. We have ADP report as well. That's also before the market. So before the market opens, it looks like there's going to be a lot of volatility. Okay, so trading in the pre-market is going to be a little bit difficult. And then another Fed speaker coming in the evening at 6:30 p.m. Eastern time, which is 3:30 p.m. Pacific time. That's 1.5 hours before the after hours trading closes. So things can quickly change, right? And this is one of the reasons why a lot of people don't like the Fed interfering with the markets. Not a free market. Okay, so this morning there were a couple of trades. So far, what's working in this market has been the gap reversals, and a couple of people have asked me to create a checklist. So I created a checklist and I made it available for everybody. You can go ahead and download that checklist here, and basically it goes through. It'll take you to this landing page where you enter your information, your email, and then you'll get to download this document telling you step-by-step instructions that you need to follow before the opening bell, so that you can get into a profitable trade. Now, there's also a couple of people requesting a workshop, because some of the things that I discussed in this document might not be something that they were kind of not confused on some of the topics, like what's IV, why do we care about the continuous and non-continuous gaps, why the 6-day moving average, why the implied volatility of 65% rather than 50%, why is it the theoretical move is 11.56 and you're taking the opposite trade when it's moving lower at 6.5. So all these are going to be kind of discussed in that workshop. But if you already know how to use it, then this is an excellent blueprint. I think once you understand most of the content here, it's basically comes down to whether or not you can interpret the VIX futures, right? The VIX futures, which is the fear index, is going to dictate whether you're on the right side of the trade. So if you get a day where the VIX is really showing a long and hard and green candle, then obviously you want to be anticipating that move with puts, right? And if the trend starts to reverse and the VIX starts to trade under the 6 and then on that day you get a long red hard green red candle, then obviously you want to be in calls. So basically just having a feel for the VIX is going to significantly improve your trading approach to the market. Now, some of the trades that I take, where I'm taking trades off of the TTM squeezes, they haven't been working because of the market's volatility, and also the bias, the bearish bias, and it's been whipsawing back and forth between calls and puts, and sometimes you get them right and sometimes you don't. But the gap reversal strategy in this market has been working fantastically. So a lot of people were asking questions about it and why we don't do this more often. So I've been doing it already 4 times, and it's 4 for 4. I started this teaching this on the YouTube videos back, but then I was a little bit busy, obviously, with the newborn. I think a lot of my time has been consumed, but now I'm kind of getting back into the groove and getting into a schedule where I'm able to kind of think properly. So this checklist is going to be important. So this is a free checklist. Download it, and then once I have your email, I'll be sending out a Zoom link. Okay, so yeah, basically when we look at the structure of the Nasdaq, it's a 135. And we have a futures gap at 13,224. This is a massive gap. So once the market starts to turn, or if things get gapped down tomorrow, I'll be looking to buy calls, okay? Because we're going to be in an oversold condition, looking for a mean reversion and back up to filling that gap at 13,224. But right now, the path of least resistance is lower. There's really nothing we can try to understand of the market until that pre-market prices set at 4 a.m. Eastern time. Okay, so if anything, again, what I'm going to do tomorrow's Wednesday. Wednesday is not the greatest trading day, but we do have a Fed speaking at 8 a.m. And I'm going to be, again, looking for anything that's gapping higher or lower. And if anything gaps higher or lower, I'll make that, I'll make an announcement in the trade alerts about which ones I'm going to be looking at after I go through all the steps I wrote down here, and then I'll take that trade and post it in the trade alert channel. All right, so thank you very much for your time, and have a great evening.